Hello, and welcome to my YouTube channel. So, if today is the first time you are coming across my video, I want you to subscribe to this channel and also turn on your notification button so that you will be notified whenever I drop a video like this on YouTube. So, on today's video, I'm going to breaking down the strategy I've been talking about in my last video, which is previous day and previous day high and previous day low of the day. So, on this video, I'm going to be giving you all the rules and regulations that you should consider before taking this strategy. First of all, you have to always make use of your support. You have to know how to draw out your support and resistance zone effectively. So the thing about this previous high and low is that you only have to trade this strategy on a London stroke New York session in a high volatility session, which is London and New York session. Now we're going straight to how you can actually trade this strategy. So now, first of all, as I normally tell you, I normally check out my the trend of the market first before I take any decision in the market. So on this trade, I'm going to a daily time frame to check out the trend of the market. Now, looking very clearly, you can see that this market is obviously in a downtrend from a higher time frame. This is euro USD. So this price is in a downtrend. So I'm seeing this as a retracement. Price is making some retracement to the upside, but the overall trend is actually down. So we go to a 4-hour time frame. Now in a 4-hour time frame, what are we looking at for? We are looking at for those key levels. First of all, you have to look out for the key levels, those key levels in a 4-hour time frame. Now, after drawing out my key levels, you can see how price reacted to these key levels. Look very closely how price reacted to this key level. Price reacted to this level from the past. See how price have been reacting to this level, and price have been reacting to this level, reacting to this level, reacting. You can see how price, you can see price reaction around this level. So in my drawing my key levels, I don't like drawing much of this level. So, and if you look very closely now, you're going to see lines, like some red lines on the screen. So these red lines are section breaks. They are section breaks so that I can actually know where to draw out my high and low of the day as my support and resistance. So now after this is an indicator. Actually, this is an indicator. So it outlined the the sections of the day. So you can see currently right now we are in between the section of the day. This is Saturday why I'm making this video. So after drawing out your key levels and the session of the day, I go to a 1-hour time frame. Now in a 1-hour time frame, what am I doing in a 1-hour time frame? In a 1-hour time frame, I am to draw out those levels, those previous high and previous low of the day. So your previous day and previous high, your previous low and previous high of the day become significant when it's at a key level. So now let me show you this. Let me show you an example here. You can see very clearly this was a section. This was a previous section. This was the previous high, and drawing out my previous high, I wait for a London break. You can see London breaks and price went and tap into the previous high of the day, and the next thing you see is that price start dropping down. And see, if I was in this trade, I would have hit TP, sweet and nice, and price tap into this level, creating a low here. So if you look very closely, you can see that there's also a low here that price created. There's also a low here. So let me duplicate this. I'm going to outline this accordingly so that you can actually understand this strategy effectively. So I will want you to watch this video to the end. You can see price break below this previous low and price retest on this zone, and it still breaks to the downside. Now this was for another day. So now this is the highest this price have gone for this day, and you can see I waited for the next day. Now the next day, which is London session, price broke London session, price broke above the price broke above this low, and price came back to retest on this level. So this day I've already created a low here already. This was the low here that price created. You look how price reacted to this level. When London breaks, London retests on this low and it buys to the upside, retesting on this other low here. Price click it on this low of the previous day and it sells to the downside. You can look, price came to this low again, it's making some kind of retesting. So if price should come back to this level, you're going to be buying, sorry, you're going to be selling after a candlestick confirmation. Then the price gets to this level, we're going to be selling. So this is like a low and this is the high of this day. So that means what we are looking at for next week is for price to either comes to this low or price to either comes to this low. Then we'll be selling from this low and we'll be buying from this low. Then if peradventure price broke above this level, then we'll be looking at to buy to the upside. So now I'm going to give you example of the previous price, how price actually reacted when it comes to the previous high and low of the day. So now let's go to the previous price. So now looking at this level here, let's start. Okay, I think let's start from here. All right, so you look very closely, this previous day and low of the day was actually in a key level, at a key level. So this was the previous high of this day and this was the previous low of the day. Sorry, I don't mean to duplicate that. So this was the previous low of the day. Now you guys should look at something. So this was a London break price came, retest on this level, came down and broke above this level. Price broke above the previous low, previous high of the last day, and it came back to retest on that level. So it becomes stronger when it is on a key level. Price broke above here. Price is supposed to wait for a retest at this level, then we enter for a buy, but price didn't retest. Instead of that, price actually came back here in the next day. So one thing you should know, whenever the previous high or low is broken, you always wait for a retest. If price doesn't retest, just know that in the nearest future, price will always come back to that low to actually cover up that space. So price did not retest here and price broke out from the next day, but the other day price still came back to retest at this level, then it buys before it breaks down. So this was the previous low and this was the previous high. So price have not mitigated this low. That means that in the future price will always come back to either react to this level. So you always put your high, keep an eye on it. So now let's go to the next day. This was the highest of this day and this was the lowest of this day. This was the low of this day. Let me extend this. So this was the low of this day. Let's see how price reacted to this level. So London breaks and London break above, causing some kind of a fake out. This was like a fake out. It normally happen. So no strategy is an holy grail. Price will always want to do its things, but just stick to your strategy. That's just one thing you should know. You can see price broke above here, causing some kind of a fake out, and price went down here and touched at this level, which is the previous low of yesterday, and price broke and price started moving to the upside. So price starts buying to the upside. Now price created another high here. So this was the previous. Now this have been deleted. Okay, let me just leave it. Let me just leave this. Now look at this level here. Look at this level. This was the previous high and this have become the previous low. So wait for either price to break the high or the low. As you can see, when London breaks, price came and price didn't reach this level. Price was greater than high and price came down, breaking below this low. Price just came down, and today there wasn't any nice trade unless those that take earlier from, maybe let me see, if people that took this trade, because this previous day low is at a key level. So people, if you've woke up around maybe 6 o'clock, you would have cashed in, because you would have caught in this trade and it's TP. So price did not actually hit at this previous low and previous high again, and price just break, and this was another section, which was the next day, and price created the high here and came down to this low, break below this low and retest. This was a retest and price sell to the downside. So this is another high price have created before it gone to another day. So this is the high of the day, price greater than high here, and this was the low of the day. So wait for a reaction. Now it's London break, and London came to this level, created some kind of a fake out on this level, and price was just, today was just a consolidation. Price was just doing some kind of consolidation. It did not hit the previous high, it did not respect the previous low, and price broke up from there and to another section. So on this section now, see how price reacted to this section. This was the previous high of yesterday, and this was previous low, and this was the previous low of yesterday. So price came London break and it hit at this previous low of yesterday, and it sells down hitting TP and break below the previous low, and this was the break below it, then created a low here. It was a low here before breaking another London session break. It retests on this previous low, showing a candlestick confirmation, and it buys to the upside. So now what you just have to do is, now you have to always check for confirmation. What I normally do now is that when I see that price is at this London break now, I actually took this trade and I hit TP. Now how did I enter this trade? Let me show you. After seeing this, I went to a 15 minutes time frame. Now in a 15 minutes time frame, what am I looking at for? I'm looking at for candlestick confirmation, the candlestick confirmation at that level. So now price came and price retest on this level, and I was waiting for a candlestick confirmation, and boom, this was an engulfing candle, and I went in for the trade. I actually bought here and I put my SL at below this support level, and price hit and hit my TP, and I was out of the trade. This is just how I took this trade. But for more confirmation, to be more careful, sometimes I go to a 15 minutes and a 5 minutes time frame. Now in a 5 minutes time frame, why am I going to a 5 minutes time frame? I always go to a 5 minutes time frame to look out for a change of character. I always look out for a change of character. Looking very closely, you can see that there was a change of character at this level. Now let me show you change of character. I switch to a line chart. Now price broke this structure to the downside. Price created another structure here. Price was able to break below this structure, and it created some kind of fake out here. This was a fake out here before price bought, breaking this structure, which becomes a change of character. Price came up to break this structure here. Sorry, this was the structure that price broke. Price broke this structure, came back to retest on this structure, and this was a change of character. And this is another opportunity for a buy. If you are afraid to take this buy from a 15 minutes time frame after seeing an engulfing candle, you can actually take this trade when seeing an Aramic candlestick pattern. So this was an Aramic candlestick pattern after price broke above this level, which means this is the end of a downtrend from the 5 minutes time frame, and it's called a change of character or market structure shift. So price break below and retest, giving us an Aramic candlestick. Then you can still go in for the buy and still put your SL below there. One thing you should know, don't ever try to like squeeze your SL. Let your stop loss be at where it's supposed to be. You shouldn't try to like squeeze it and make it to be the way you want it to be. Let it be where it's meant to be, not where you want it to be. So I actually put my SL here and I put my TP in a risk to reward ratio of 1 to 2, and price smash TP. And this is the same reason I've been taking my trade. Even yesterday trade I took, this was the same reason. So this is just how you can actually utilize this strategy. Previous high and previous low of the day. This is one of the best strategy you should always check for. So I will want you to try this strategy back test using your section break. Make sure you back test this strategy and come back to the comment section and tell me what you think about this strategy. So if you actually enjoyed this video, I want you to do me a favor by subscribing to this channel, liking this video, and also commenting on this video. Turn on your notification button so that you'll be notified whenever I drop a content like this.